Hello, 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 hello. How many hellos was that? That was four hellos. Good four hello Wednesday. We'll start with that. Good morning, Ro. Good morning, Legion Reaver. Hey, Sterling, are we putting a Bank of Japan's that? All right. They make our Federal Reserve look competent. That's all I'm going to say. You want pretty much one of the worst central banks on dealing with stuff and their viewpoints and managing stuff is the Bank of Japan. That's only in my view. So boy, hey, Mitko one arf arf. Thank you. What else do we have? What else do we have? Good morning. There's Sterling with the good morning. Yeah, we are watching the rise in long-term yields more carefully. Oh, wait till it becomes an avalanche. Oh, let's see. We always had Apple and something. Yep, that is gaslighting Sterling. Good morning, Patrick. The U.S. dollars, yeah, devalued by 98.47, and you'll be happy. You'll be happy with everybody, and though you'll have to put your kids to work to afford your home and groceries and everything else. And there you go. Inflation since 2021. Eggs up. We're just going to round up 50%. Gasoline 48%. Yeah, I saw that those things come out yesterday. Morning, Heinrich. And house prices. I mean, it's just absurd. I'm seeing more and more. It's so fascinating here because I was just looking at a house that sold in October of 2020 for 800. Just came on. They want 1.55 million with no updates. So in 4 years, not even 4 years, it, you know what? And then I'm seeing more properties that were offered for rent. I looked at one 5,700. They wanted it for rent at 5,700, and they just put it up for 1.7 million. So you couldn't rent it at 5,700, and you want 1.7 million. It's all right. I'd rent the damn property at 5,700 before I buy it at 1.7 million. Figure out what your down payment at current rates, unless you're well, even if you're paying in cash, you'd be an idiot because you have update and maintenance on the property. But just do some math and figure out what percentage down you'd have to at current. Use 7% rates, which came out this morning. We see them right here. Just use 7% rates. So figure out. This is a fun exercise. Figure out what your down payment would have to be at 7% rates to get you to 5,700 a month. And that's not including property taxes, insurance, and everything else. It makes no sense. And I'm seeing this repeatedly. Absurd. And they're wondering why properties are sitting there. Besides, if you get something reasonably priced, at least reasonably priced as of things now, which is not insane, it's only mildly insane, not super insane. People are still, they're going contingent, but super insane is sitting there, and 85% is super insane, I'd say. All right, let's see what else we got here. McRangers, good morning. Effectively means uninvested money from 2019 is now worth 1/4 less today. I completely agree. But now, let's say you're fully invested and the stocks are going to the moon and you leveraged housing and everything. What if we get a dual pullback? I want to know what happens if we get the dual pullback in the markets and in housing. ARMs are starting to come. Some of the shorter term ARMs are starting to come due. And people are now like, what? My ARM at 3.5 is going to reset to 6.5. And most ARMs are over $1 million. Think about that. The balance on most ARMs are the majority of ARMs are over $1 million. What happens if, I'm just wondering, what happens if yields don't drop? What if yields actually go up, especially longer term yields? What if something triggers Longer term yields to keep climbing. Then what? Because, the status quo is Fed's going to cut, yields are magically going to come down, everybody's going to refinance, and everything's going to continue to go to the moon. All right. Good morning, John. Good morning, Eric. Oh, what? Do you think there's gains and manipulate? You think the data's manipulated? Hello, Charles. Do you think that we'll see 533 and create double? I think that was a double top on the SPY with MACD getting ready to cross the downside. I don't know what the PCE. We have the GDP numbers tomorrow. We got PCE on Friday. Who knows? Do I trust any numbers? I mean, even if the PCE comes in slightly, it's going to be somewhat suppressed versus what's really going on. Mike, the answer to my question is you can finance $857,000 for 30 years at $5,700, and that's just principal and interest. All right. So what would you have to put down? So do the math. So let me ask you a question. Would you rather rent that property? Would you rather rent that property or buy it? Because this is what I'm even seeing levels at lower end. Rental $3,700, but they're asking $990. I'd rent it all day long. So, yeah, 30 years are at session low today, and NASDAQ's not liking it. And look at the 10-year. Really follow the 10 years. All right, we have got enough of my pontificating. Sorry if you didn't want to hear it. But Richard's still tuning in. Good morning. Again, 30-year mortgages coming out today, 7. And there's not going to be a magic. I mean, I've talked to brokers. Wait till it gets to a 6 handle. Everybody's going to be a buyer. All right, so it hits 6.99 or even 6.9 or 6.8. Everybody's going to magically turn into a buyer. Did price? Is that going to make a difference? It could psychologically, but I'm not seeing people with a lot of flush cash, even in very wealthy areas, unless you're the mega wealthy. We got, what do we have? Mortgage applications down substantially. Things are really starting to roll in the rollover in the markets the housing market from my perspective, or stagnate and / roll. Red book coming in. People still buying. 6.3 versus 5.5. Now, what do we have coming up? 10 a.m. Eastern, we have the Richmond regional numbers, and 30 minutes after that, we have the Dallas services numbers. Then we got some more auctions coming up. The auction yesterday, I forgot which one it was. It was on the shorter end. It was ugly. Auction. We got Williams speaking at 1:45 Eastern. Fed Beige Book coming out at 2. And then we got Bostic speaking tonight. What else? Oh, NVIDIA. Did NVIDIA actually turn red? Look at this. All right, we're finally getting some red. Except we should all eat at Mickey D's because the market's coming down. Even fast food. What's the Big Mac up to? It's over $8 for a big friggin' Mac. Come on. Fast food's now a luxury. Not that you should eat it anyways because it's not very healthy, but this is going to catch up. But everything to the moon. The people are flush with cash. Every sector negative, with comm serves and consumer cyclical leading it down. But we've been on a tear to run up. Let me just refresh this because we're getting a shift in things. I know we were back to a pause in September. Still a pause in September, and that number's starting to climb again. With the first cut slightly favored after the election. I don't know how they're going to cut. I really don't. I don't know how they're going to cut this year without stoking more inflation. Neutral on the markets. I'm expecting this to drop back into fear mode. All right, in terms of earnings, we had, Advanced Auto Parts was a miss on revenue, which is critical. Abercrombie Fitch had the insanely good in. Are people all of a sudden rushing with the little money they have to uh, buy Abercrombie and Fitch stuff? Everything, it's the world's turned upside down. By the way, after close, Salesforce is the biggie. Salesforce is the biggie. And then tomorrow, I went by the Kohl's here in Scottsdale, and it's been deserted. Because the Panera that I go to is right across the street from the Kohl's. So when I'm getting my iced tea, the Kohl's is, I don't know how Kohl's stays around. We got Dollar General tomorrow, and we got Best Buy tomorrow morning. All right, let's get to the markets. So we did not get in the S&P futures to double top. We still have the massive double top. The weekly massive double top is still definitely in play, but a long way. Now, if this triggers, then we'll start getting interesting in the markets. In the short term, so we closed in a rotation zone. Remember, generally you get, after the first close in the rotation zone, you get a bounce. We did not even get to the level of double top. We closed in the shorter term levels above the 62.5, but did not follow through with the daily close. Did not follow through. Remember, the longer term the chart is, so daily is more important than 4 hour. The probabilities go up as you get the longer term closes. We're now rotating back down. The critical level for me is 52.65. That's where we start getting critical. If we start closing below there, I'm watching for a return to the 50, and we break below the 50, I'm watching for possibly 51.65, and then the critical level for the front run potentially of the double is about 51.15. Now, shorter term, since we're coming into some very key support area, let me flip these real quick. The real quick flip, because you see here we spiked back down to 62.5, and now even on the 1 hour we're closed below the 62.5, closing in on that 87.5. On the 4 hour we closed below the 62.5, so we followed through with a 4 hour close. So this is why I'm going to be watching these lower areas, especially as 52.81 area, then 52.73. Then, if it breaks the lows from last Thursday, I'm using the harmonics. And we have a prior breakout level, you see here over to the left. Resistance, resistance, turning into support. And we got a harmonic right below it. So about 52.63 to 52.62. That would be if we broke the lows. So if we start to run, and that's not just for today, because even if we hold these lows today, we got the GDP numbers tomorrow and the quarterly PCE numbers tomorrow. Then we got 52.49.75, so 52.50. On the upside, since we've already validated this, I'm just going to use the harmonics going back up, 52.90. Then roughly 52.98 to 5300, and I'll be keeping an eye on the 1 hour rotation zone going down. That's exactly how, personally, I would structure something in the S&P. Good morning, Anissa. What's up with gold? We'll get to gold. Boss GG. They're creating problems to sell solutions. Because stop creating problems. Exactly, Sterling Rent. I was reading a report and I was doing some other research. The market is currently and I'm seeing this, 60% overvalued for home sales versus the equivalent rent. Even if it was roughly flat, you're better off renting, except for security purposes. And I don't mean security from being robbed. I mean security from at least you own the home. But if you could get a rental at the same price as your mortgage, you're still better off renting, except for landlord issues, because you technically don't have to do all the upkeep. Now, you might pay a slight premium for buying, because you want that security. But a lot of times throughout history, and I've been looking all around the country, rentals have traded at a premium to sales price. So because of that nature. Now they're not. And out here it's insane. 60% overvalued to renting. Why would you even consider buying? You can even rent on the higher end. But we're back to let's just leverage ourselves to the hilt. Now, all the agents say it's guaranteed to go up. So in terms of the NASDAQ, it's guaranteed to go up. Well, there are no guarantees in life. NASDAQ's going to get very interesting. It is in little mini double top territory, so I'm going to pull these right now. We got that. Again, what I'm going to be watching going into the open, if you combine, you see this little pausing area here. So spiked above it was key resistance, reversal right there, but then it paused right here before the big rally breakout on Friday. That's right at the 62.5. So this 18,755 area is going to be key for me. On the NASDAQ, we start closing below that. 18, what is that? 18,710. Then we're looking at about 18,666. Uh-oh, 18,666. We're doomed. On any bounce, we got 18.8 as the first level of key resistance, and then my major resistance levels coming in at about 18,840. But this could get interesting because this double top, if it does trigger, and that would need a close, still technically against the daily rotation zone. So the probabilities have not shifted yet, but it would be a close below 18,621.50. Could potentially take us back to the 50 EMA. The Dow. No loving for the Dow. Remember, I was talking. We got that one-day pause. We took it out on Tuesday, and now we followed through. I said yesterday, watch if we really break this low with a one-day pause. And we followed through. The key area to watch on the closing is 38,494. So that's the key level I'm watching right there for today on the close and tomorrow on the close. The key resistance is about 38,850. The Russell. Let's flip this just shy of that 87.5, but let's flip it. Because look at this, the prior breakout level, right over here, and the 50% harmonic, so about 2024 to 2027 is my key support area. The kiss it goodbye level, at least in the short term, is 1997. The key resistance level is right around 2058. Yeah, they guaranteed that real estate only went up during the Ninja, no income, no job, no assets days too, didn't they? Yep. And everybody says, well, it's different because they've been more strict on mortgages, but you have a lot of liar loans in the rental industry because you didn't have to show income or anything else. You could just show projected rental income to get the loan. A lot of investors did that. It's also, and they weren't ever intent on renting the property. They did it projecting income because they wanted to flip the property, but they could qualify for the loan based off projected rental income, and they figured they would just carry it and flip it. But now a lot of those properties are still sitting empty, and they're trying to flip them at higher prices, which is not going to happen from my perspective. VIX getting to this elevated, headed into the end of the week numbers. So above all our recent key levels, pay attention to 14, the 14 handle today. The 14 handle today is very key support. Resistance is 1470. The DAX, here we go. The DAX did qualify for a channeling double top. So the first target is going to be very key for this 18,385. It has not officially triggered on a closing basis. But resistance now is about 18,580 to, it's a sort of a wide resistance range of 18,650. But on any bounce, I'd be watching for another rollover play in that. Notes. Breaking down, I said I was watching yesterday with this channel. Breaking down below it. Today I'm watching if it close below one, follow through with a 108.06.5. Close below that, that would favor the notes continuing lower. And then we've now broken the key support right here. So any rally, we have 108.16 is the first level of resistance. You can see the yields. We had the little pause. We had the key resistance is 4.5 level. And now we're rocketing up. Look at this, 4.575, closing in on that. That's very key for today's close. Yields really climbing. Came back, found support at the 200 area. I'm telling you, this is going to get interesting. And on the flip side with this, if I come back to here, because this pullback never even got to the 50%, so none of this, remember, it closed above before. If you look at the, if you look at the purple lines, remember, it closed above the 62.5, stalled out to 75, but this pullback did not invalidate. We could easily still go back to this 4.859 based off probabilities. I don't think people are really paying attention to this yet. Yield curve. This was interesting because the 10-year was rising. Look at the 2-year. The 2 years now in mini double top territory, but I'll be shocked if this triggers. You can see right there, I'll be shocked if that triggers. The dollar index in double bottom territory against the 200 with yesterday. So for the people following the percent Bs, we pulled negative on the percent B, so that made yesterday's high very key, and we've broken that and coming up. So keep an eye on today's with a follow through close, because the high now from Thursday, Friday area is going to be very key, because that could trigger another double bottom. Crude. Now, we had a strong momentum day in crude. Remember, in the longer term, there's your 200. Big momentum day in crude. And look at the crude close. That's the highest close since the downward close at the end of April. So crude carving out a bottom. This is why triple bottoms only slightly favor continuation. Slightly. And we got the key reversal. So we had a low close here, but this is almost a modified shake and bake. So now I'm watching it for crude to stay above 79.50. And then the next key target is 81.90. Gold. That's right. Gold. We're still watching. We got the close below 62.5. Still watching for a continued pullback based off the probabilities here. Now, that's not necessarily to trigger this double top. It just would be a continued pullback. What will make me sit up and take notice is if we get a move and then with a follow-through close now back above 23.65. That'll make me, now remember, I'm still long-term, and based off the long-term stuff, it is still bullish. However, if we do trigger the double, I would have to be prepared for a pullback to the area of the 200 and the prior breakout area. So that's why I'm watching this double very closely. Silver, we're in mini double top territory, so I'm going to keep an eye on that. From that would be at least from a short-term level. We've had a massive run-up in silver. That would be a topping pattern there. Remember, copper against the rotation zone so far. You see it's caught on it, but it did trigger the double. So if we start breaking below this 474 area, going to watch for that double to play out and possibly probably a return to the 50. The 10-year, look at this. Talked about this. The 10-year, next harmonic hit, the 10-year. We have the smartest people in the room, Bank of Japan. Highest, now this is going to get, if it follows through, could be the highest since December of 11 on a closing basis. That's going to get very, very interesting. They're in a wait and see mode, but once this starts running, it could really start running, and then they're going to have a problem with a continuing weakening of the yen. And the yen yesterday closing above the 62.5. So next target's 158.13, 159.18. Euro has a potential double top. So if we could trigger this also, I'll pay more attention to the dollar running higher. Spiders, we did not get to mini double top territory here, but I'm paying attention to right here. We're open. I'm sorry, I'm going late today. We opened, let me do this. Actually, if you notice here, we got above but did not follow through on a close with the daily of the 62.5. So 525.45 area on any rally. Miners 526.17. More significant is, let me do this, is about 526.90. Key for me is this 524.72. If we start breaking below that, I got a significant cluster at 523, about 65 to 80. The Qs, which did get to this little mini double top territory. So your key is from last Thursday's low. However, going into the open, your major resistance is back at 457.25. Support levels I'm watching 454.65 and then roughly about 454. If yes, mortgage rates will reflect the direction of the 10-year yields. I did not see a, let me go, did I miss something with the dollar index? Head and shoulders on the daily. As this is not reversing a big enough move. Because you'd be shoulder, head, shoulder, and it's technically... Now, I'd just be watching, if it breaks down below 103.60, yes, I'd be watching for the dollar then to continue significant weakening. Maybe my next teaching video could be the Mike Arnold, not the Ricky Bobby shake and bake. Oh, the Japanese 10-year chart on the longer term looks really impressive. Nice long-term rounded bottom. It does. This is why these central banks are just looking in their rear view mirror. I mean, this is that. Where's the Japanese 10-year? I hit the wrong one. There it is. Well, you also had this nice double bottom that played out, and this can run a lot higher for a lot longer. They're going to be asleep at the wheel. All right, let's take a look at the S&P. S&P on the open. Oh, the brief pause at the 87.5. This would be a sort of opening weak tick. Let's see. Ooh, that is a weak opening tick, spiking down to negative 1750. Wow. Look at, wow. That's the weakest opening since April 10th, it looks like. So we're bouncing back. We'll be watching more for rollover plays now. Watching now more for rollover plays, especially since we got the declining rotation zone. So on any bounces, 52.85 level, I'll be watching. Yeah, Jake's got it. We're tick level since April 10th. Good job. Everybody here is doing such a fantastic job at analyzing. I hope it's turning in and helping you to trade or invest better. We just take a look at the 10-year yield off the open. 450. Yeah. Things are definitely starting to get that tone of shifting. NVIDIA, which has been on a stupid tear, this is starting to feel like a blow-off top. A blow-off top. You had the 0-day options going off insane. So keep an eye right there. Also with NVIDIA in a little mini double top territory. Okay. So that's a mini, which takes that down to the gap. And then if it starts, you're going to get a lot of trapped people potentially here at some point. But would I be shorting this? No, not yet. This is not a significant topping pattern yet. All right, everyone. I just want to have enough money to go heavy short when the market really rolls over. Don't know if you want to go. You know what? You can go short. That'll be, or at least overweight hedges. I definitely look at overweighting hedges to the downside and lightening up longs you don't want to live with for a while. Heavy short, there might be a time for it. There might be a time. We'll have to see. We're still in this environment where you get the Fed Reserve stepping in, you get the government just, trying to manipulate everything. But one of these days, it's going to completely unravel. They're not going to be able to stop what's coming, from my viewpoint. That's only my viewpoint. Although in the short term, from a technical damage point of view, remember this last key sell-off, this last 5% sell-off set up a major area to potentially take a medium-term shift in the markets. But now it looks like it's going to start getting heavy on the short term. So from a short term, I'm starting to favor the downside, but it's got to then follow through, breaking some key levels before I really start favoring it on the medium term. And long term, the valuations still aren't there to justify a substantial bottom. Warren Buffett, yes, Warren Buffett did sell his Apple shares, and he's holding on to a lot of cash. All right. With that, I shall talk to everyone tomorrow. Have a fantastic, fantastic day. Bye for now.